All right, so the pattern day trading rule is changed. Check it out. Here, as of April 2026, the SEC here in the United States approved the elimination of the $25,000 minimum balance for the pattern day trader rule. This basically means that you can't enter a trade and close a trade on the same day more than a certain amount of times if you have less than $25,000 in your account. Otherwise, you won't be able to have access to the funds, and you have to wait like a period of days before being able to place more trades and then close them on the same day. So I'm going to talk to you about why I think this is a good thing for traders and why it also doesn't make sense that this was even a rule in the first place. So let's go ahead and get into it. So the key changes in impact. They've removed the $25,000 minimum and they've replaced it with a $2,000 rule. So basically all it means is that now, instead of having 25K in the account, you just have to have $2,000 in your US regulated brokerage account to be able to trade stocks and be able to day trade. So a couple things here. The first thing I think is the financial sector is so heavily regulated needlessly that it prevents people from even being able to have access to being able to trade. The barrier of entry is just so high. And then on top of that, the reason I thought it was such bullshit to begin with is that gambling is legal in certain parts of the country here in the United States. And even in other countries like the UK, you guys have like spread betting laws where like basically trading is considered gambling, you know, rightfully so, considering that 90 to 95% of people just lose money trading. And it was classified as gambling or spread betting, in which like you don't even have to pay taxes on anything you win because it's just considered like FU money. It's considered like you won and you were just gambling, and there's no way you can have a statistical edge, and so you have spread betting. Here in the United States, though, the fact that gambling is legal in a couple states, right? So Las Vegas is one of them, Oklahoma is another one, and I live here in Texas where gambling is illegal in the state of Texas. So most people just go north about, you know, an hour from where I live here in Fort Worth, Texas, to be able to gamble. So the fact that you can just straight up gamble in a system that is designed like it's literally designed in a way for you to lose money, right? At a lot of casinos. And the moment you have any sort of edge, like if you're playing blackjack or poker and you're card counting, you get to be able to have some sort of an edge, and then you get kicked out by the casinos. They'll see that you're counting cards. They'll see that you're have some sort of an edge. You'll make a couple $1,000s. They'll kick. My camera froze. Holy shit! All right, let's. So they'll kick you out of the casino, and then you won't be able to actually be able to trade, or sorry, to be able to play poker or blackjack in those casinos. And so the fact that the moment you get any edge, you're banned from playing in casinos, those certain types of games. But yet we have trading, which is so heavily regulated that it prevents people from being able to even like get into an area where they can find an edge in trading. It prevents them from being able to come in and do it in a way that is like relatively easy for the average person to do. Most people do not have $25,000 to begin with, let alone $25,000 that they're comfortable risking to be able to trade. Because whatever, I'm a believer that whatever money you deposit into your account, you should be willing to understand that you could lose all of that money, and then in some cases even more if the broker doesn't have like balance protection. You can actually go below zero. Then if you want to trade with that broker again, you have to fund your account up to get it just back to zero, and then even more to get it past the deposit to be able to trade with more. The fact that gambling's legal but trading is so heavily regulated just makes me wonder. I'm like, okay, what is the real motive here? What is the real incentive? Is it really to protect people, or is it just to have more control over the financial markets and alienate people who don't have a lot of capital to trade under the costume of protecting them, while you can still tell them, yeah, go to a casino though, lose your money there, that's perfectly legal. It's just wild to me. So I'm really, really happy that this pattern day trading rule has changed because it really gives people a shot at trading. So I wanted to make this video to kind of cover that. I've been trading for a decade, and I've seen so much stuff shift in the industry. I've seen prop firms come up and be proliferated. Some of them go boom and bust, like they do really well for a while, then they get shut down. I've seen brokers that have been introduced that allow people the ability to trade a little bit more easily. I'm here in the US, so technically, like all the brokers here that are regulated, you get 1 to 50 leverage max, but that's only on 2 or 3 currency pairs in the Forex market. And then you have to, you're basically forced to use lower leverage for the rest of the pairs, like 1 to 30, 1 to 20, 1 to 10 in some cases on some certain currency pairs. Or you have to go and trade with unregulated brokers in which you have nothing, you cannot get your capital back if, if the broker does something like they steal your money or they deny you a payout, as has happened to me a couple times over the course of 2023 and 2024. So with that, I think that if we are to extend this regulation outside of just securities in the US and then have the US basically say, okay, if you're going to be trading other markets like Forex and you're going to be trading other markets like, let's say, cryptocurrency, having laws that assist people who are just getting into the game with lower amounts of capital, I think is a much more respectable way to go about it as compared to saying like, yeah, we're going to say that gambling can be legal in multiple states in the US, but trading, we're going to make it really, really hard if you want to get into trading. So those are just my thoughts. I'm happy that this has happened, and I do hope we see less stringent regulation on things like forex trading, to where you can have regulated brokers here in the U.S. where you can put a small deposit, like a couple $100s, just to play around with, and then you can trade with basically high leverage. So that way, if you lose your money, okay, cool, we'll just call it gambling. That should be perfectly fine. It should be someone's decision that they get to make on their own. By making it super, super hard for people to do it, all it does is it alienates everybody who's trying to get in, the people that would benefit the most from trading. When I started trading 10 years ago in 2016, it was really difficult for me to try to figure out like what to do, where to go, what brokers to trust, how to trade, how to structure risk, and how to do all that. And we don't have a lot of systems in place where the average person can do that right now. So it just gets really, really hard. So for you guys that do trade stocks or equities here in the US stock market, cool. Now you don't have to have $25,000 in your account. You can have about $2,000. I would deposit like probably around $3,000 minimum, just in case you lose a couple trades and you're risking like say $100 per trade. You still have some cash in your account. You still got some dry powder, so that way you can be able to trade, even with the PDT rule not applying to you. If you lose a couple trades on a $3,000 account, that way your balance is maintained at $2,000 or more at all times, basically. Unless you're risking $100 and you lose 10 trades in a row, now your account's down to 2,000. You might want to revisit your trading system at some point if that's the case. But I think this is a net positive for people, and I'm really, really happy about it. And I hope to see less stringent regulation and more conservative regulation going forward, and particularly the Forex and crypto markets. So that's all I got for you guys today. Hope you guys have a good rest of the day, and I will see you in the next one. Cheers.